The biggest question the market is debating right now is, will Bitcoin have the strength to break through the 118,000 to 121,000 resistance zone to ignite a historic bull cycle? Or is this simply a distribution top before a brutal correction? In today's video, we'll go through four main parts. 1. The long-term macro picture. 2. Short-term dynamics. Stablecoins, ETFs, and whales. 3. Risks and key support and resistance zones. 4. Concrete scenarios for BTC and ETH. This is not a simple price update. This is a full on-chain breakdown. Insights you won't easily find anywhere else. If you really want to understand what's happening behind the chart, stay until the end. Part 1. The long-term view. Let's start with valuation. The percent supply in profit has reached 98.17%. When almost everyone is in profit, the market naturally faces systematic profit-taking pressure. The MVRV Z-score is around 2.4. Not yet in the overheated red zone above 3, but high enough to ring a warning bell. One bad trigger and profit-taking waves can spread quickly. Conclusion: the long term is not broken, but the risk margin is rising. Looking deeper into supply, URPD data shows a very dense cluster between 118,000 to 121,000. This is the firewall of the cycle. LTHs mostly hold coins below 60,000. STHs are concentrated between 100,000 to 120,000. If price reverses, STHs are prone to panic. Whales, who entered around 80,000 to 100,000, will defend or strategically distribute. Conclusion: 118,000 to 121,000 is the battlefield of supply and demand for this cycle. Looking at long-term holders, LTH net position change shows accumulation from March to June, then distribution from July to September. However, realized cap by age tilts toward older coins. Long-term conviction remains strong. LTH binary spending showed a red bar in late September, but it hasn't extended. No signs of euphoric top yet. Summary of Part 1. Valuation is high, profit-taking risk is rising. The 118,000 to 121,000 zone is decisive. LTHs are not dumping massively. The long-term foundation is intact. That was the long-term picture. But the market is decided by what happens day by day. Now, let's dive into Part 2, the short-term undercurrents. Part 2, short-term dynamics. Realized profits spiked to $3.640 billion around 118,600. A pattern repeating the July and late September tops. Entity-adjusted realized profit hit about $2.9 billion STHs under 3 months sold heavily. The 6-month to 2-year cohort also took profit. A short-term distribution phase is real. Spot volume delta is red, sellers dominant. Futures CVD is often negative, the crowd leaning short. But paradoxically, too many shorts right below a major resistance can become squeeze fuel if price breaks 120,000. Liquidation maps show heavy shorts at 114,000 to 120,000. Above 120,000, there's a large short wall. A breakout could catapult price to 12,200 to 125,000. Below, long walls at 105,000 to 110,000. Losing 110,000 could trigger a cascade. Question for you: who's really steering the market right now? Whales or retail FOMO? Comment below. ETFs and stablecoins. The trigger of capital flows. US spot ETFs saw huge inflows of $5 billion to $7 billion USD a day in September. At the end of September, inflows returned. Stablecoins on exchanges total about $586 billion US, with USDT around $489 billion USD. Buying power turned green again from late Q3 into early Q4. BTC and Ethereum net exchange position shows massive outflows across 2024 to 2025. September ended with extremely large outflows. Long-term bullish. Summary of Part 2. Realized profits are a short-term drag. Derivatives lean short equals squeeze potential above 120,000. ETFs plus stablecoins equals the main cannon. Part 3. Risks and price levels. The sell wall at 118,000 to 121,000, plus 98% supply in profit. Systemic profit-taking pressure. LTHs have shown distribution. Profit-taking spikes repeated. ETH spot bias is red. Flows prefer BTC. If BTC stalls, LTS suffer. Options OI puts heavy at 114,000, calls dense at 118,000 to 122,000. This creates a pin or whipsaw zone at 116,000 to 118,000. Part 4 Scenarios. Bullish case conditions: a weekly close above 121,000 with spot buy side strength, ETF inflows greater than or equal to 300 million USD per day, breaking 120,000 to trigger short liquidations, LTHS not dumping, MVRV stays under 3, stablecoins continue to flow in. Path above 121,000, sweep 122,000 to 125,000. Sustained flows equal target 135,000 to 142,000. Invalidation, daily close under 114,000. ETF outflows for several days. Spot delta red. Bearish case, conditions: sharp rejection at 120,000 to 121,000. ETF flows flip to consistent outflows. Spot delta turns red widely, breaking 114,000 triggers puts and long liquidations toward 110,000. LTHS distributing while MVRV stays high. Path: lose 114,000, test 110,000. If cascading, down to 105,000 or 100,000. Invalidation, weekly close above 121,000 with strong spots, and ETF inflows back. Conclusion: as of early October 2025, I lean 60% bullish, 40% bearish. Why bullish? ETF inflows have returned, stablecoin ammo is abundant, exchange outflows are strong, and the crowd is short. Fuel for a squeeze above 120,000. But the 118 to 121,000 sell wall and 98% supply in profit remain heavy headwinds. Checklist: 1. ETF inflows greater than or equal to 300 million. 2. Daily weekly close above 121,000 bullish, below 114,000 bearish. 3. Spot buy side strength sustained. 4. LTH binary spending not red for days. 5. Long short bias near neutral or positive. Watch short clusters if 120,000 breaks. Final message: the cycle will be decided at 118,000 to 121,000. If buyers win, the door to 135,000 to 142,000 opens. If sellers hold, protect capital at 114,000 to 110,000. If you found value, please like the video, subscribe, turn on notifications, and share your view in the comments. Bullish 60/40 or a straight 50/50? Disclaimer: this is not financial advice. All content is for educational and informational purposes only. Crypto is high risk. Do your own research and take responsibility.